MONAD's pulling in billions. The hype machine is in overdrive. But while everyone's screaming about the new shiny object, there's a blockchain quietly stacking institutional wins, crushing technical benchmarks, and just dropped research that could fundamentally rewrite how Layer 1 blockchains actually work. I'm talking about Sei, and no, this isn't another hidden gem pitch. The data tells a story that most people are completely missing. By the end of this video, you might realize the loudest project in the room isn't always the one building the strongest foundation. Welcome back to the channel. If you're tired of surface-level crypto takes and actually want to understand what separates legitimate tech from marketing theater, you're in the right place. Smash that like button, subscribe if you haven't already, and turn on notifications, because we're diving deep into one of the most underrated narratives in crypto right now. MONAD is everywhere. Twitter threads, Discord channels, influencer endorsements. The buzz is undeniable, and honestly, they've earned some of it, pushing boundaries, making bold claims, generating genuine excitement. But here's what I've learned after years in this space. The loudest voice rarely builds the strongest product. Hype is temporary. Technology is permanent. So when I started comparing Sei and MONAD side by side, the numbers started telling a wildly different story than the narrative everyone's running with. Sei isn't just competing. In multiple critical areas, they're actually outperforming. And most people have no idea. Let's talk raw specs because honestly, numbers don't lie. Sei delivers sub 400 millisecond transaction finality. That's essentially instant. We're talking 100 million gas per second capacity, paired with their custom twin-turbo consensus system. Full EVM compatibility for seamless developer onboarding. Now compare that to MONAD. Alright, so, on paper, Sei hits around 12,500 transactions per second. MONAD peaks closer to 10,000. Already interesting, right? But wait, what about network fees? Sei's are up to 3 times cheaper. 3 times! That's not just a minor optimization, folks. That's a massive competitive advantage for both users and developers building applications. A crypto analyst on X, Alt Crypto Gems, nailed it perfectly saying, MONAD might be the center of attention right now, but once the hype clears up, everything becomes much clearer. Seriously, why would developers choose slower speeds and higher fees when a technically superior alternative exists? Unless you're just following the crowd, which, let's be honest, is exactly what most retail investors do. But, technology alone doesn't win markets. Ecosystem health matters, distribution matters, and this is where things get really spicy. Sei raised significantly less venture capital money than MONAD. Now, some people might see that as a weakness. I see it as a strength. Less VC money typically means more community ownership, less insider dumping, and better long-term tokenomics. Sei's already listed on more major exchanges, giving it broader market access and liquidity. That's not luck, that's strategic execution. Now here's where my jaw actually dropped. Institutional preference. BlackRock, Apollo, Brevin Howard, Hamilton Lane. These aren't crypto-native speculators throwing around meme coins. These are multi-billion-dollar financial institutions that have chosen Sei for on-chain experimentation and infrastructure development. And it gets better. There's already a staked SEI ETF sitting on the DTCC active/pre-launch list. Let me repeat that. A staked SEI ETF is already in the regulatory pipeline. How many Layer 1 blockchains can make that claim this early in a market cycle? That's not hype. That's institutional conviction. That's serious money betting on long-term viability. According to my own analysis, when traditional finance giants start building on your blockchain, it signals something fundamentally different than retail-driven hype. These institutions have compliance teams, risk assessment departments, and multi-year strategic planning horizons. They're not making decisions based on Twitter engagement metrics. Just when you think the Sei story couldn't get more compelling, they release a research breakthrough that legitimately changes the conversation. Sei Labs just published a paper introducing Sei Giga. Architectural innovation is the name of the game here. This isn't incremental improvement. This is architectural innovation. Traditional blockchains operate with one block proposer at a time. It's literally a single-lane road. Traffic jams are inevitable at scale. Sei Giga introduces multiple concurrent block proposers simultaneously. Multiple lanes, different infrastructure model entirely. Here's why this matters beyond, just the technical jargon. It unlocks new MEV behavior patterns, but even more importantly, it actually makes it possible to design user protections before they ever experience any negative impacts. Most blockchains are reactive. Problems show up. and then solutions get patched in later. Now let's look at on-chain metrics, because price action without context is just gambling. According to analyst Godwin of Web3 on X, Sei Network's daily gas usage has exploded from just a few billion in early 2024 to somewhere around 150 to 200 billion recently. On November 28, 2025, gas usage spiked 24% to 178.1 billion. Current 24-hour totals are hitting 184 billion, according to SeiScan data. For context, gas usage measures actual computational activity, real transactions, real users, real applications consuming network resources. This isn't vanity metrics. This is organic network maturation. The pattern shows resilience through market volatility, consistent growth through both dips and spikes. That up only with battle scars trajectory indicates legitimate adoption rather than speculative bubbles. CI's gas trends are rivaling top chains like Solana in activity growth. That's elite company. And remember, Sei launched in 2023. Another analyst, Sei Wizard, posted data showing Sei added 125,265 new unique EVM addresses in just 24 hours, ending November 27, 2025. Total distinct addresses now exceed 82.78 million. Let me put that in perspective. Sei expanded from 2.5 million addresses in November 2024 to over 81 million by mid-November 2025. That's not linear growth. That's exponential network effects kicking in. This aligns perfectly with Sei's EVM-compatible, high-throughput design optimized for DeFi and trading applications. Recent ecosystem milestones include processing over 100 million blocks and surpassing chains like Sui in active address counts. These aren't marketing claims. These are verifiable on-chain metrics that anyone can check independently. The community optimism isn't baseless hype. It's grounded in measurable adoption momentum. Now let's address the current price action because I know that's what everyone's thinking about. So, Sei is, really trying to stabilize above the 14-cent mark after several weeks of selling pressure. Technical indicators right now are showing weakening bearish momentum rather than any kind of bullish reversal. The MACD line is still just a bit below the signal line, sort of hovering near zero. The Chaikin money flow is sitting around negative 0.20, which honestly indicates that there are still persistent capital outflows. And yeah, recovery attempts are being met with selling pressure instead of accumulation. According to crypto analyst Michael van de Poppe, SEI is sitting at critical support around 14 cents and he's actually marking it as primed for a potential breakout above resistance, maybe toward targets near 38 cents. Recent developments like the November 2025 CI-CTEL tool launch for AI-driven node diagnostics continue to bolster CI's utility in high-speed DeFi trading. And, price predictions are forecasting SEI could potentially reach 50 cents or even higher by 2026. Based on the current ecosystem growth trajectories. Here's my honest take. Short-term price action is noisy and unpredictable, but fundamentals eventually win. MONAD has hype, and listen, hype works until it doesn't. When the initial excitement cools and investors start actually comparing fundamentals, I believe Sei is positioned to flip the narrative completely. It's really something to watch out for. This isn't financial advice. Just to be clear, this is pattern recognition from someone who's watched multiple market cycles. So, keep that in mind, folks. The projects that survive bear markets and thrive in the next bull run aren't the ones with the loudest marketing. Nope, they're the ones building real technology, attracting institutional capital, and demonstrating sustained on-chain growth. And you know what? Sei checks every single one of those boxes. It's impressive, to say the least. So, what do I think? Well, I think MONAD is having its moment, and that's fine. But, moments pass, foundations last. Sei is stacking advantages methodically while everyone's distracted by the shiny object. If you found this analysis valuable, do me a favor. Like this video, drop your thoughts in the comments below and check out my other videos. And hey, subscribe if you want analysis that goes beyond surface level hype. Let's keep this conversation going. Quick reminder, this is not financial advice. Cryptocurrency investments carry substantial risk. Never invest more than you can afford to lose. Always do your own research, verify claims independently, and consult with qualified financial advisors before making investment decisions. The crypto market is volatile and unpredictable. Trade responsibly.